Hello and welcome back to Digital Assets Daily. Good morning, good afternoon, and good evening, wherever you are in your corner of the world. We're going to discuss the Volcker Rule really lightly, because a lot of people don't seem to realize or understand, and others don't even know what is about to happen as of January 1st, 2020. The Board of Governors of the Federal Reserve System have, the agency have analyzed the changes to the Volcker Rule to simplify it. Let's go into this a little bit just so that you will now be aware of it. If you knew, great, here's an update and a reminder. If you did not, now you will be aware and conscious of it. 5 federal financial regulatory agencies on Tuesday announced that they finalized revisions to simplify compliance requirements relating to the Volcker Rule. By statute, the Volcker Rule generally prohibits banking entities from engaging in proprietary trading or investing in or sponsoring hedge funds or private equity funds. Under the revised rule, firms that do not have significant trading activities will have simplified and streamlined compliance requirements, while firms with significant trading activity will have more stringent compliance requirements. Community banks generally are exempt from the Volcker Rule by statute. The revisions continue to prohibit proprietary trading while providing greater clarity and certainty for activities allowed under the law. With the changes, the agencies expect that the universe of trades that are considered prohibited proprietary trading will remain generally the same as under the agency's 2013 rule. The changes were jointly developed by the Federal Reserve Board, the Commodity Futures Trading Commission, the Federal Deposit Insurance Corporation, the Office of the Comptroller of the Currency, and the Securities and Exchange Commission. The rules will be effective on January 1st, 2020, with a compliance date of January 1, 2020. From January 1st, 2020 to January 1, 2021. And then we have the actual finalized changes to simplify the Volcker Rule. I'm not really going to go into this, but feel free to breeze through the article as it will be available. The links will be available in the description below. Next, I want to play a little segment from Treasury Secretary Steven Mnuchin discussing the historic deal between the U.S. trade deal and China. Let's see if we can give this a shot.
It's a historic deal. We've never had anything like this. It addresses very significant issues: technology transfer, intellectual property, structural agricultural issues, financial services, and currencies. So we couldn't be more excited about the impact that this is going to have on the U.S. economy and U.S. jobs. We're going to go through a very short period of time of having the translation scrubbed. The deal will be signed in early January, and then we'll start phase 2. In phase 2, maybe 2A, 2B, 2C, we'll see. But this into itself is a huge accomplishment for the president.
What do you say to those critics who complain that this phase 1 didn't accomplish anything, really?
Well, in all fairness, people are just beginning to understand the details of phase 1. We're in the process of putting out fact sheets that go through what it is. You know, this has been a long process over the last 2 years, and people have seen the ups and downs. So I think it's going to take a little bit of time for people to digest the significance of this.
Next, we're going to go into Ripple is thriving off the failures of antique SWIFT system. The market analyst tells boom bust. I think Steven Mnuchin is correct on that. And I think a lot of people don't realize if you do something today, it may not take effect for actually today or tomorrow. It may take a week or two. It might take a month or two. But then once a change is made and the effect is obvious, then it starts speeding up a lot faster and then becoming by design, a lot more faster and a lot more obvious. Ripple, the company behind cryptocurrency XRP, has raised US 200 million USD in its latest investment round, bringing its valuation to $10 billion as the startup aims to further grow its cross-border payments business. However, the success of the San Francisco-based firm with its growing base of consumers sending live payments did not result in a huge movement in XRP, which has the third largest cryptocurrency market capitalization behind Bitcoin and Ethereum. This can be explained by the fact that the token is a specific kind of crypto, making it uninteresting for regular investors, according to Jeffrey Tucker of the American Institute of Economic Research. That does not mean it's not going to change the world. I think it's an extremely important technology because it's thriving off the failures of this antique SWIFT system, the analyst told Boom Bust. Our legacy financial systems are incapable of dealing with the new age of globalization. So, taking crypto to kind of fill this market niche, and XRP has been really valuable in that sense. Alright guys, hope you're having a great day. This is not financial advice. We're here for entertainment purposes only, and we will catch you in the next one.